Good morning, traders. So this morning, I want to take a look at a trade that I made an adjustment to here back on January 10th. So we can see that this trade is currently up. Well, it's bouncing all over, but it's currently up about $500-600, somewhere in that general range. I'm going to close this window just to give us a little more space here to see the trade. So if you remember, I had originally put on this long put spread, okay? And then the market rallied up, and then I came in on the 10th, January 10th, exactly 1 week ago, and when our market was up in this general area, the 4760 range or so, actually let me scroll over here to a chart. So when our market was, let me get my pencil here, when our market was, in this general area here, I said, you know what, I don't think our market's going to pop through 4,800. I'm going to put a call spread on there so that I can juice the trade a little bit and take advantage of basically reducing my downside risk in case the market backs up. So that is the premise that I was working under here. That's why this whole thing, that structure was added. And when that was added, that caused my downside risk to be reduced. So I want to look at doing the same thing again. Now it's important to note that this thing expires here in just 2 days. So it's going to start to decay very, very rapidly. And this curve right here is going to very quickly come up and morph into that. But do I want to take the chance of the market retracing here and being down $1,000, given the weakness that we've had in the last couple days? For me personally, I would rather shift my risk from here up to here, okay? I'd rather have upside risk at this point. So how might I do that? Well, I can come in and sell another call spread. Remember, I sold this call spread right here, which is this trade right here. But let's look at what happens if I sell another one. So let me come in. I'm going to sell. Let me turn off my drawing tool here. I'm going to sell a short call. So I'm going to sell a call. I'm going to put that right here at this same point. I'm going to turn this into a butterfly is what I'm going to do. So I'm going to sell a 47.35 call there. Well, I don't want this unlimited upside risk. I never want to have that sort of situation. Well, let me rephrase that. For the purposes of learning, you should never have an uncovered short position. At some point in your trading career, when you advance to a certain point, that's a perfectly viable position. But for someone learning to trade and practicing paper trading, etc., just do defined risk positions. So in order to do that, I need to now add a long call. So I'm going to buy a call. And I'll buy that call somewhere in this general vicinity. So I can kind of roll this around and figure out, well, where do I want to buy that long call? Okay, so it looks like right around in here. What I like about this particular scenario, this particular setup that I'm in, is I have neutralized, let me get my drawing tool back on here, I have neutralized my delta. So I'm pretty flat delta now. My T0 line, rather than being, sloped this way, it's pretty flat. So now if the market chops back and forth in this area, and I've got quite a bit of decay that can happen over the next couple days, which is a plus, I also have I've largely reduced my downside risk. And I shifted my downside risk to the upside. So I'm basically saying at this point that, yeah, I don't really think our market's going to go above 48.10 by Friday. That's essentially what I'm saying if I'm willing to take on a position like this. So for comparison purposes, let's just go back and take a quick look here. We'll look at the previous position, okay, which has all this downside risk, and it has no upside risk at this point. And I'm shifting that risk by adding in that call spread you're going to see pop in here. I am shifting that risk, and I'm doing that by essentially selling this call spread right here, which is adding that structure right there. And in doing so, I've virtually taken out the downside risk. I've left myself a nice piece of tent here that I can still decay in. If the market were to shoot up over the next couple days, I can still expect about a $500 profit in this trade. I only start getting into trouble if we're up in here by Friday. So that's the premise behind this particular adjustment. And I'm going to go ahead now and essentially lock in this trade, lock in this adjustment. So I'm going to save this. And I'm going to add in here that on the 17th, 1/17/24, I juiced the trade further and took out most, I didn't take it all out, most downside risk in the process. And I'm going to overwrite this. I'll save it, or excuse me, I don't want to overwrite it because I like to have the progressions. I'm going to save this as a new trade. And then I'll copy this link and share it with everyone. And I also kind of want you to see here, if I come back to my, my saved trades here, I want you to notice that the original configuration of this trade before I juiced it, it would be right in this area here. So it's still up a little bit, but look at this. It's got $1,400 in downside risk, and it doesn't have any upside risk. So you can see that the progression of this trade, this was the starting point of that trade. Then from there, I juiced the first time by adding that, let's see, it would be, I think this one right here. I added that upper structure, okay, right here. And then, of course, you know what we just did here today was to add that further structure onto this trade. And let me just shrink this down a little bit, putting this in that configuration. So that's kind of the cycle that this trade has marched through. And I like this. Now I need to keep in mind here, there's only 2 days to expiration. So we can see this dashed line right here, this higher dashed line. Let me turn my drawing tool back on here a second. So this higher dashed line is where we should be tomorrow if the market stays in this general area. So that's going to be pushing, around $1,000 in P&L tomorrow by the end of the day. That'll be the end of the day on Thursday. And then, of course, by the end of the day Friday, it will essentially take that shape. But I probably won't carry this all the way into Friday. I'll probably look personally, if I had this trade on, to take it off tomorrow. And again, we should be trading everything in paper. But even in paper, you've got to practice what you're going to do in live trading. So I'll probably take a look at this tomorrow, maybe late in the day, possibly Friday morning at the latest, when this thing gets up into here, and see about pulling that trade off. In live trading, I would actually come in and I would take a look at what it would cost to take that particular structure off, and I would have an order actually waiting out there at a price target that I wanted to sell it at. So that's just kind of how I operate in my normal trading world, if you will. I usually have an order sitting out there waiting to take that profit. So if I'm off doing something else and not paying attention to this, that trade will still execute for me. So hopefully you found that interesting. Again, if you find this content informative and you like this sort of thing, make sure that you like, subscribe, give me a comment below. If there's any specific things that you'd like to see, let me know that as well. Love producing this content. OptionStrat, love sharing it. And I thank everyone, and we'll talk to you later.